Well, every missed EMI and every delayed credit card payment will come back to haunt you. Now, banks and lenders are beginning to use your credit scores every time they decide whether or not you should be given a loan, which means that you should be very careful about all of your payments. They have to happen on time. But what happens if you already have a default on your credit history? Is there a way to fix that situation? And how do you figure out if your credit history is bad? Here's a guide on, first of all, taking a look at your credit history, figuring out what the problems are, and then fixing them.
Swiping your credit card every time you shop is effortless. The real challenge lies when the bill arrives. Every payment you delay or default on any loan will leave a trail on your credit report. The Credit Information Bureau of India, CIBIL, has a file on each of us. It lists out all the loans we have taken and all the payments that are made. It also has a score that helps banks decide whether or not we are responsible borrowers. Lenders refer to your credit score every time you apply for a loan.
Credit score is basically a reflection of an individual's creditworthiness. And it also depends on a kind of loan that you're taking. So for example, if you're taking a housing loan or an asset-backed loan, the banks could be a little more relaxed purely because they have assets to back up. If you're taking a loan which is completely unsecured, they would want somebody who has a higher rating.
The good news is you are allowed to ask for a copy of your file from CIBIL. All you have to do is go on the website and submit your proof of identification.
You have to pay 470 rupees and then answer 5 questions. If you are able to answer 3 of them correctly, they will send you the report as well as the score through email.
Once your file arrives, look for the credit score. It varies between 300 to 900, 300 being the lowest. A score below 650 means a major default. A score above 750 is considered good. If you have a low score, you need to correct it before applying for a new loan. And here's how you can do it. To begin with, clear all your defaults. You are better off paying in full rather than making a settlement.
It's never a good idea to go and settle. While it may not reflect as a default, but any kind of settlement itself is also not good on your credit history from long-term perspective.
Your credit score places more weightage on your recent behavior. So you could take a small secured loan against your investments and pay it back on time to improve your score.
Takes some amount of time. So if you were to give me, if I was to give you a rule of thumb, I'd say that it takes anything from 6 months to a few years. It really depends how bad it is to start with. But typically we've seen credit scores starting to improve post 6 months.
Ensure you pay the monthly balance of your credit card in full. A regular practice will steadily build a relationship with your bank.
Some banks have lower requirements saying that you'll do the loan even if the credit score is less than 750. Some banks are stricter and say that they won't. It really depends upon the bank itself. Also traditionally NBFCs are a little more lenient than banks when it comes to checking your credit score.
If you realize your credit history file has an error, when it shows a default on a loan you already have paid off, you should get it corrected. Write to CIBIL and alert the bureau about the error.
Just like you should get a physical examination, your health examination done every year once you reach a certain age, I think a financial health checkup, which is what a credit report is, should be an annual feature.
If you think you have nothing to worry about because you have never taken a loan, you're wrong.
You want to buy a car loan, they know that, hey, this guy's used his credit card for 5 years, he's always paid back his monthly balance, he must be someone who can access credit prudently. So take your car loan at that point in time, pay your monthly EMIs in time. So 5 years later, when you go in for your home loan in your early 30s, your credit score has been built up to a stage wherein, hey, you've accessed a credit card, used it well, you've accessed a car loan, you used it well, and now you're ready for an even bigger ticket, which is your home loan.
Take a look at your credit history today and begin to maintain it, so that when you have found your dream home, your bank will be more than willing to process your loan.